Dear colleagues and friends, good afternoon. Thank you for being with us today. We are about to start the press conference by the Governor of the Bank of Russia, Elvira Nabiullina, and the Deputy Governor, Alexei Zabotkin. And to start with, we will hear the statement by the Governor following the Board of Directors meeting. Good afternoon. Today, we have made the decision to keep the key rate at 21% per annum. Inflation notably accelerated at the end of the year, according to our estimates. This was the result of the considerable overheating in demand that could even have become stronger in the second half last year. At the same time, factors that will be slowing down inflation have been gaining momentum. In the first place, this is a continuing cool down in the lending market coupled with a rise in household savings. Thus, we're now more certain that monetary conditions have already become restrictive enough for inflation to start decelerating in the next few months. Therefore, we have decided to continue the pause in the key rate increases. If the early monetary policy tightening turns out to be insufficient, we will be ready to reconsider the issue of raising the key rate at the next meeting. I will now dwell on the reasons behind our today's decision. Firstly, as regards inflation. Price pressures remain significant. The underlying inflation indicators exceeded 10% by the end of 2024, which is certainly an intolerably high level in our view. In addition, in the underlying factors, the price dynamics in December were also affected by the early weakening of the ruble. In particular, the growth of prices for products highly dependent on the exchange rate, primarily electronics and household appliances, sped up. The underlying component of inflation was largely fueled by inflation expectations. They're still very high among all groups of economic agents. Analysts who participate in our macroeconomic survey have raised their inflation expectations for 2025. At the same time, according to recent data, businesses have substantially lowered their price expectations for the first time since Q1 2024, which is an optimistic sign. High-frequency data on inflation in January and February suggests that current price growth has slightly decelerated compared to the end of 2024. However, it would be premature to talk about a reversal in the trend. As to the revision of the inflation forecast for 2025, I would like to notice that this year has started from a very high level, that is, very high price growth rates. Due to considerable inertia, it will take time to slow down inflation, and prices will rise by 7 to 8% by the end of this year. Nevertheless, price growth is expected to slow down every quarter, and by the end of 2025, month-on-month inflation will be consistent with the rate of 4% in annualized terms. Our inflation forecast relies on the baseline scenario that assumes a gradual return of the economy to a balanced growth path. I will now speak of the economic situation. The recent statistics for Q4 2024 show that GDP growth has sped up. According to our estimates, the economy's upward deviation from a balanced growth path has not decreased. Alongside inflation, another major indicator of overheating is the labor market. And although staff shortages are still acute, businesses continue to signal that the situation has started to return to normal. Our regional branches report a higher number of companies that have been decreasing the demand for labor. This means a more active reallocation of employees from some industries to the ones that are still experiencing considerable staff shortages. Overall, companies are reducing their recruitment targets and no longer plan to raise wages as fast as last year. Combined with the measures taken by businesses to enhance their efficiency, this will help make the growth rate of wages more in line with the rise of labor productivity. The updated forecast takes into account that domestic demand expanded more significantly by the beginning of 2025 than previously expected. Accordingly, GDP growth will be slightly higher this year, specifically 1 to 2%. Meanwhile, we have reduced our GDP growth forecast for the next year in an equivalent way. Overall, our view of the medium-term path of the economy remains unchanged. We expect that as the effects of monetary tightening and fiscal policy normalization build up, overheating will be gradually decreasing. Accumulated economic growth over the next 3 years will be in line with our October forecast. Now, as regards monetary conditions, since our December meeting, interest rates in the financial market have edged down, whereas non-price bank lending conditions have become more restrictive. Generally, the dynamics of loans and deposits suggest that monetary conditions are tightening further. Lending is already cooling down in all market segments. Furthermore, households have increased their saving activity. The reduction in market rates is associated with two factors. The first one is that market participants have revised their expectations of the key rate path downwards. As a result, yield curves in the money and debt markets have notably shifted lower since the end of December. Secondly, we have fine-tuned some regulatory measures. This has partially eased the excessive tightening of monetary conditions that was related to the regulation. Nonetheless, interest rates are still rather high. Affected by restrictive monetary conditions, lending has been slowing down since December. Over the past 2 months, banks' corporate and retail portfolios have both contracted. The decline in lending activity is one of the first stages of the transmission of our decisions to the economy, while the inflation rate is the final one. It will take time for the current slowdown in lending to fully translate into prices. It is worth taking into account that the deceleration in corporate lending is associated not only with our policy. Another important factor is budget expenditures. Normally, budget payments peak in December. This year, budget expenditures were high in January as well, exceeding their seasonal norm. This was explained by earlier prepayments under the state contracts. Having received budgetary funds, companies were actively repaying bank loans. Hence, the data about the decline in lending are, so to say, noisy. According to our estimate, if adjusted for the budget payments, the slowdown in lending is more moderate. We consider that the combined effect of the budget and lending will result in more modest dynamics of money supply. As is evident from recent data, money supply is growing more slowly than at the end of last year, and we will continue to closely monitor changes in budget expenditures, comparing them, among other things, with the pace of the cool-down in the lending market. We have revised the lending growth forecast for this year downwards to 6-11%. The lending growth will be slowing down due to both tight monetary conditions and the planned normalization of the regulatory requirements. More moderate growth rates in lending are necessary to ensure disinflation in the economy. Briefly about external conditions. The world economy has continued to expand at a moderate pace. According to our updated forecast, the dynamics of the key items of the balance of payments have remained nearly the same compared to October. It is worth noting that beginning from our February meeting, we switch from publishing forecasts for Brent oil prices to Russian oil price used for tax purposes. This price better reflects how the situation in the oil market affects the key indicators of the Russian economy. I will now dwell on the risks to the baseline forecast. The balance of risks is still shifted towards pro-inflationary ones. As regards the factors that might cause a deviation from our baseline scenario towards a high inflation rate, I would notice risks related to the external environment. The threats of new trade wars and fragmentation of global markets entail risks to business activity worldwide and might lead to a decline in the demand for Russian exports. As a result, we might face a decrease in both the price and quantities of exports. Moreover, there are still risks associated with inflation expectations in the labor market. The key disinflationary risk is a more substantial deceleration in lending. Our baseline scenario assumes a gradual and controllable decrease in lending activity. Nevertheless, the risk of a sharper slowdown does exist. This is why we will be tracking credit dynamics very closely. Changes in fiscal policy parameters, including the scope of subsidized lending programs, might influence our decisions. The baseline scenario implies the return to the fiscal rule in 2025, which will have a disinflationary effect. Furthermore, when making our decisions, we will also take into account geopolitical factors. They remain a source of high uncertainty. Winding up, I would like to comment on monetary policy outlook. We have concluded that the pause in key rate increase is the most balanced decision in the current conditions. At our next meetings, we will need to make sure that the existing trends are leading to a steady decrease in inflation. If it turns out that monetary conditions are not sufficiently restrictive for a sustained slowdown in lending and inflation, we do not rule out the possibility of a further key rate increase. Whatever the case, monetary conditions should remain tight for a longer period. Therefore, we have raised the forecast path of the key rate for 2025-26. Thank you for your attention. Now, dear colleagues, over to the Q&A. Don't forget to introduce yourselves, identify your agency. Rita, in the first row, please. Thanks very much, Rita Shpilevska, task agency. Elvira Nabiullina, have you decided the possibility of reducing the rate and the possibility of raising it over a certain period of time into the future? No, we haven't debated the decrease of the state. We considered two options, either to keep it as it was or to raise it. The time frame for the decrease, I think you paid attention to our outlook for the key rate and the interval that we have mentioned, which implies both the possibility of reducing the rate as well as we don't rule out that it will be raised further. It will all depend upon the way the trends sustain themselves. Nastya, in the third row, please. Anastasia Savelyeva, Interfax Agency. To what extent the currently observed slowdown in lending do you believe is already sustainable? You have taken out this particular indicator from your consideration because you are sure of it, or as you said, you still consider that there might be a risk that the slowdown in lending is more significant than what is necessary to achieve the target. To what extent this particular risk is realistic? And a little bit of a follow-up, because honestly, I thought that Rita will raise this question, but what kind of optionalities that you have reviewed during a board meeting of sending us signals? As I have already put it, the December-January data, particularly in corporate lending area, if we talk about it specifically, this data is too nosy, considering the retail lending since the middle of the year. We have been seeing a very stable slowdown. That's where we can talk about a sustainable trend. As far as the corporate lending is concerned, we require more information to make sure that this is a sustainable slowdown. Because currently, in this quite material slowdown in corporate lending, there is a bit of a seasonal factor, because this year, fiscal payment, they exceeded the seasonal usual level, and that's why they were higher in January. So we need to have more time in order to make sure that this is indeed a sustainable trend. So we will definitely further monitor its dynamics. As far as possible signals have been concerned, yes, we have considered a moderate kind of a signal, which we have ultimately come up with, as well as the neutral one. I mean, the neutral one was proposed by the colleagues who believed that the tightness in the monetary conditions, as well as the lending dynamics currently viewed, as well as other indicators, the tightness in the monetary conditions was enough in order for the inflation to go stably down to 4%. Mr. Zapotkin? Well, maybe I should emphasize such a thing, that in terms of its impact upon demand, lending serves as a very important source for the demand dynamics. But nevertheless, the ultimate result in terms of the monetary impact comes from the money aggregates. So to separate lending from all of it is not very correct, because what is important is the overall monetary aggregate dynamics. And so in this sense, we do acknowledge the slowdown, but hopefully we will be seeing more and more stable trends setting in. Dear colleagues, more questions? Rita, please. Margarita Mordovin, RBK. Recently, The situation where the regulation settlement of the Ukrainian conflict has been part of the debate, which in many ways has came out as a bit of a support for the exchange rate in the Russian stock market. In any scenarios, including the central bank scenarios, do you account for this factor, and how do you believe it might impact overall economic processes, and what do you believe will be its also impact upon inflation and the key rate? Thank you. We don't account for this particular factor in our baseline scenario because we believe it is premature to include particularly such a thing into the baseline option. It would all depend upon the way the situation may evolve, because to precisely estimate how it might influence our economy and inflation is hardly possible. Next question comes from online from Viktor Komisarov. Arguments and Facts newspaper from the city of Kaluga. We see that despite a very high key rate, inflation continues to grow. Due to that, some believe that the key rate growth led us all to a reverse result. I mean, the inflation growing because of a greater spending on the part of the household and businesses to serve their lending. Is that true? Well, I mean, the real inflation is indeed a bit higher than we would like it to be, but if we were not to raise the key rates, which is something that I mentioned more than once, inflation would have been much higher, and it would have been accelerating even further on top of it. But thinking that the growth of the key rate is propelling inflation further is deeply erroneous, because the higher key rate indeed that pushes the businesses and the households to spend more to serve their credit burden, but at the same time it deters the excessive demand that exceeds the possibility of goods and product manufacturing. As far as inflation is concerned, the effect from this excessive demand deterrence is much stronger. That is why higher key rate unequivocally leads to the price slowdown. So whenever somebody is saying that the high key rate leads to a growing inflation, and people always argue in favor of saying that the businesses' expenditures grow, but the interest expenses that the businesses incur is part of the manufacturers and average loans is the biggest one. I'm not talking about the overburdened companies where this could be more than the average one, but on the average one it shows that it is not very big. So based on our estimates, I think I've quoted it before, over the past 5 years, the cost on supporting their lending wouldn't exceed 5% of cost. Many companies don't have any debts, and they are able to develop their businesses using their own capital. The main share of costs, non-interest ones, and they grow along with the overall price growth in the economy. Whenever you buy inputs, excipients, raw materials, so the inflation of costs is just the reverse side of the demand inflation, and the result of competition between companies for resources which are in shortage, specifically the labor. And so when raising the key rate, the central bank curbs for the businesses to spend more in terms of their capital side. And so consequently, whenever demand is too high, companies may very easily pass all of the growing costs into prices. So by raising the key rate, we cool the demand down. Essentially, we bring the businesses to make up their mind whether to continue passing their costs over to the consumers. But in this case, if the demand is curbed, then such businesses will lose the market share, which is something they don't want. So that is an imperative for them to reduce costs, to improve labor productivity, which is something definitely necessary for this country's economy. Thank you, colleagues. Elena, the last one. Elena Fabrichna, Reuters. During the past few days, we've been witnessing the ruble rally. So do you believe that the appreciation of the ruble is already impacting inflation? And if it continues, becomes more sustainable, will that lead to a earlier reduction of the key rate? Well, the strengthening of the ruble also took place in December. And this is definitely a disinflationary factor, which is a trend translate into the price is a bit of a time lag. So considering the goods which in their prices are dependent upon the exchange rate, we do note the reduction of the price growth that particularly applies to the smartphones and the household electronics. But that particular effect is also spread out in time. As I said, the appreciation of the ruble, if it becomes sustainable, that is a disinflationary factor, and we will definitely take into account amongst the plethora of other factors, because the strengthening of the ruble in itself is not the only factor which may bring about the reduction of the key rate to an earlier point in time. Colleagues, Sergey, please. Sergei Bolotov, the Russian Gazette. In the summary about the key rate, it has been stated that the board of directors debates it, so in a situation when it may grow or may go down, is there a short list of the most important indicators which, with a very high level of probability, would allow one to forecast the key rate going down or growing up, like the lending rate, the exchange, ruble exchange, or the fiscal spending, and so this 5 points are enough to understand whether to predict whether the key rate will go down or will go up. Well, thank you very much. I mean, the question about the indicators and the basic assumptions which impact our decision every now and then arise, we publish it frequently in order to share this, because in terms of there being a closed list of indicators, alas, it's not existing. We're trying to analyze everything that might impact but the economy and inflation. That is a broad set of parameters which describe external, internal economic environment, including down in the regions, which constitutes an important part of the work we do. I believe that out of what you've enumerated, definitely we'll look at the fiscal, not really fiscal spending, but the deficit, because that is something that first impacts the demand dynamics. Inflation expectations, definitely. Household inflation expectations, we always keep it in our sights. Now, there aren't the most important indicators for all time. In different situations, different indicators acquire greater weight. As a rule, we're very cognizant of the kind of indicators, the dynamics of which demonstrates the biggest deviation from the average historic or the stable trend, or the ones which most notably changed since the last board meeting, because they may contain more information about the way situation evolves and how the inflationary situation changes. You may recall that almost 1 year ago in March, when there were such questions, we issued triggers. I will describe them that way. Rather, the issues that we are monitoring to make up our mind whether to decrease or increase the key rate, that was about the current inflation expectations, consumer activity, lending, labor market. Its condition is very, very important, as well as the external risks and the fiscal situation. So, as of that point in time, since March last year, I would say various risks and factors have come to be, which led us to the need to raise the key rate. As I said, at different times, different factors are at a bigger place. So right now, we are watching over the current inflationary pressure at the labour market, what is going on there, because the state of the labour market is also one of the indicators of whether the economy is overheating or not. Business sentiments, because we want to understand the extent to which a very strong overheating in demand side remains in the economy. Another area which we find extremely important is the assessment of the tightness of the monetary conditions, in order to be able to see whether the current measure of tightness is enough for the inflation to stably go down to the target. To put it in a nutshell, we are looking at the current picture. Overwhelmingly, different indicators come to the forefront at different times. We're trying to reflect this in the summary in order for you to understand, in order for the public to understand what was the most important consideration in our decision-making. Thank you very much. Barbara, next to you, please. Varvara Mikhalchova, Market Power publication. Now, for the further growing of the key rate will be the narrowing of the spread in terms of the banks offering funding, or the results in lending offering in January and February enables one not to compensate for this. Well, thank you very much. Indeed, the spreads have narrowed because we have adjusted our decision-making in the banking regulation, and first and foremost in terms of the short-term liquidity standards. We have adjusted the schedule for the banks according to which they are supposed to achieve the adequacy levels of their own volition and expand the possibility to be granted irrecoverable credit lines, which led to the spreads becoming narrower. But at the same time, we don't believe that the narrowing spread led to the overall softening of the monetary conditions, which require compensation. Because, on the contrary, we believe that the monetary conditions, if you analyze it, both the price-based ones and the non-price-based ones, not only in terms of the deposit component, but also in terms of the price conditions in lending, we believe that they haven't softened, they have become more tighter. Thank you. Next question comes from the city of Novosibirsk, from Lolita Belova, Kommersant Siberia newspaper. The growth of the key rate will make the credit resources more expensive. Do you expect a greater number of insolvencies in the businesses to happen? No, we don't expect any wave of insolvencies to inundate us. Yes, of course, there are very strongly overburdened companies in terms of the lending. In their case, the growing cost of servicing their debt constitutes an important consideration, which considerably eats away their profits. But for the majority of the companies, the financial status primarily depends upon the growing costs. Yes, situation may become worse if the basic costs may continue to grow related to the wages, inputs, resources, greater tariffs, more expensive logistics and supply chain, including because of the sanctions. So the growth of such costs is the direct result of an overheating demand, and the high inflation is an indicator of that. So in our mind, not less for the households, businesses are also standing to gain more from inflation coming back to the normal life, for which purpose we need a higher key rate. So generally speaking, the businesses, irrespective of the overall cost growth as well as the interest rate growth, is able to maintain its financial stability, which is something that we are quite mindful of, amongst other things, through the extent to which the number of applications is being received by different banks for debt restructuring. In the small and medium-sized business segments, we do see it still taking place, which is important, but the overall volume of restructuring, the number of refinancing cases doesn't exceed the level of 2023. And the quality of the banking lending is also one of the indicators. The share of the so-called distressed loans, bad loans, corporate bad loans, less than 3 to 4%, 3.7, which is not a big value. So this is something that we are monitoring continuously, and so we don't expect any big problems here. Thank you. Yana, over there, please. Yana Churachkina, RIA Novosti, Elvira Nabiullina. I've got a question about inflation. As of February 10th, inflation in Russia, according to the central bank, was 10%. What do you think? When this inflation peak will be reached, following which it, if not to say slow down, at least will stay at a plateau level, and when ultimately we will go back to one-digit inflation at least? Well, that's true. Inflation is currently unacceptably high as far as our inflation forecast is concerned. We have reconsidered it upward for this year, and there are several components to it. There is an annual inflation, the one that measures inflation over the past 12 months. Effectively, you compare inflation in February this year with the February of the previous year. And so this annual inflation indicator depends upon what the last year's base is going to look like. We expect we would be able to make a judgment of it sometime in April, May. So as far as the current inflation is concerned, inflation, the price growth rate month on month, which is clean from the seasonal impacts, then we feel that it will soon start to slow down. There may be a slight increase in it because of the tariff indexation to take place in July, but the most important thing is that we expect that towards the end of the year, this monthly inflation, which characterizes the current price pressure, towards the end of the year, it will reach 4% annualized. But simply because we entered this year with a high inflation, then towards the end of the year, the annual inflation will be at about 7 to 8%. Thank you. Now then. Yes, it's your turn. Maria Filushina, Bitkogan. Recently, now, you said that it's premature in the meantime to take into account the peaceful settlement and its probability, but at what point in time there should be certain agreements reached so that the Bank of Russia would seriously account for them in their monetary policy? Well, you know, I would rather not speculate on this topic at all, because let's leave and see, because I believe it's going to become obvious to everyone. I mean, when one could take into account our baseline scenario, like I've said it, is based upon the notion of unchanged geopolitical environment going further. Nikita Mitrofanov, Economical Telegram Channel. I've got a question about a horror story, because I read the regulatory information in the federal law where I was able to see that the central bank has the mandate to freeze the deposits in the commercial banks. I mean, not really. People are talking about it, and you don't see many arguments about it. And so I would like to really raise the question whether the central bank indeed has such a mandate. I'm not talking about individual cases when banking licenses are being revoked, but if you do have it, then what kind of criteria central bank is going to apply in order to use this mandate? No, the Bank of Russia doesn't have such an authority written in the law. This is the kind of authority that one absolutely doesn't need. That really wouldn't make any sense. Thank you. The next question comes online from Yevgenia Pismina, Bloomberg. Since the beginning of January, 60% of the sanctioned oil tankers are standing still. Does the central bank consider the risk of the fact that the export revenue may strongly go down over the next few months? Will there become any problems in the hard currency supply in the market? Well, we don't see any problems in the meantime with the supply of hard currency. We are tracking the export revenue sales of hard currency by the exporting entities. But as far as the probability of the export revenue shrinking, I mean, there could be different factors. It could come from the world economic development, trade fragmentation, trade wars, which may result in the global economy pace going down, ultimately affecting the demand in our case. So we consider this as part of the risk scenario, which we put together every year and present it. And in it, we take into account, amongst other things, the risks of export revenues contracting. Colleagues, Ivan in the second row, please. Ivan Schleging for Mag.ru. I've got a question here about the lending slowdown, because there are several factors that which are counterproductive to each other. I mean, meaning to say that if big business doesn't get the necessary loan, it goes into placing the bonds. Another factor is that the smaller borrowers, when they don't normal kind of lending, they go into the microfinance. Another factor is that the debtors, when they struggle to deal with their credit burden, recently they started delaying their payments, and the money intended to pay off their debts, they use in order to put them into certain liquidity funds and after that pay off their debts. Now, to what extent these factors which are counterproductive to what the central bank is doing have any material significance, or they don't? Well, without doubt, we do observe and watch out for the three factors that you've enlisted, not only them. Yes, we do have the bond market growth. We believe this is quite a positive happening. But nevertheless, despite such a growth we see in the bond market, its volumes, what it raises is materially smaller, because usually people are taking a look at how much bonds have been placed. You need to take a look at a net placement with the deduction of the maturity payments, and over the years there's a bit of seasonality and there are certain spikes that you could see. So we don't see a strong overflow, but if companies would go more for the bonds in the market and less borrow from the banks, that is still lending by the banks in a different way. But that is a very normal thing, because we always have been saying that we want the stock market and the bond markets to develop. And as far as a possible overflowing towards a microfinance institution, if you talk about the household borrowers, we don't see such a strong trend. It's just that these markets are simply incomparable in terms of their scales. Just fractions of a percentage in terms of how much individuals borrow from the microfinance compared to the amount of lending they take from a bank. This kind of an overflow will definitely be impeded by other means, our macro-prudential regulation, which is quite equalized in between the banks and the microfinance institutions. As far as postponing the payment for loans, we do also monitor payment discipline. In the meantime, we haven't noticed any big problem here. Thank you. Lyuba, please. Good afternoon, Lyubov Mihetova, Expert magazine. The analysts, amongst the pro-inflationary factors, more material, identify the utilities bill payment, which is for 2025. They also remind us that in 2018, the Central Bank of Russia convinced the Ministry of Finance to reduce the indexing of the price growth for the utilities of 4%. So the growth was from 3.3 to 3.4 in 6. But based on the Russian Office of Statistics, the inflation throughout the same period of time was in between 3.4 to 0.9%. So do you believe the reduction of the indexing rate down to target in terms of inflation, an important disinflationary factor in the current environment, would it do any help? And what is the Central Bank of Russia attitude towards higher indexation of tariffs as written in the budget? Well, the reduction of the tariff indexation rate by the national monopolies, which are utility services vendors from 2016-17, that was an important disinflationary factor. And indeed, this set of measures by the government helped the central bank then to make sure that the inflation is relatively stable around the 4% target. Certainly, the utilities tariffs growth at a higher pace, it is a pro-inflationary factor. Now, why, amongst other things, why it is a pro-inflationary factor? Because the utility services may not constitute a big share in the household consumption basket. I think it's 6%, if I'm not mistaken. But the tariff growth in the utilities sector, if it is at a high pace, it really pushes the inflation expectations higher, has the secondary effect, and so the reason as to why the pro-inflationary expectations remain on our side requires a tighter monetary policy, of course. But simultaneously, we are aware that when the costs in the economy grow strongly for a continuous period of time, and regrettably this is a fourth year in a row that we're going through it, a certain indexation of the utilities tariffs is necessary because these businesses also have to comply with their business models. It is very important to find a balance here because it cannot simply be just passing higher costs on the shoulders of household and continue to operating ineffectively. Therefore, here one must identify an equilibrium, find a balance, which is the responsibility of the government. On our side, we have taken a look into it just to understand what kind of a contribution this high tariff indexation makes into inflation compared to the situation for the tariffs to be indexed by the target inflation measure, which was 4%. And so this contribution is half a percentage point into inflation. Thank you. Colleagues, please. Marina Pimenova, NTV Business News. It was stated in summer that the Bank of England decision in terms of key rate was impacted by the Taylor Swift tour because the cities that she went through demonstrated high spending. Well, we're not that, but we got January holidays, then the 23rd of February, which is the Red Army Day, the 8th of March, flowers and other holidays. To what extent inflation is being impacted by these one-day holidays and this massive spending that the Russians go for? Well, I can immediately respond. Holidays do not affect inflation. We certainly do take such factors into account, but there is a difference. For example, there is a big show or the World Cup. That was a one-off event. Holidays are different because holidays happen every year on the same date. So speaking in an economic terms, this is being taken into account. You know it yourself. Before March 8th, prices for flowers really jump up, and after March 8th, they fall back again. And that happens year in, year out. And this doesn't impact neither inflation nor the inflation expectation. Mrs. Zabotkin, yes, please. I would even say that whatever is happening to the flower prices on the eve of March 8th and on March 8th doesn't impact the March inflation, because towards the end of March, even by March 15th, the prices go back to where they used to be before this holiday. Thanks very much. Congratulations on those holidays beforehand. Next question comes online from Alexei Tretyakov, the Red North newspaper from the city of Vologda. Alexei, go ahead. Good afternoon. Based on the data from the Bank of Russia, the mortgage lending this year went back to an adequate level after 2023 when it was overheated by the government subsidization. I remind you that then the mortgage portfolio grew more than 30%. In 2024, it grew by 13.4%. Now, is it possible at the same time to solve the most important problem is to provide people with affordable housing? Thank you very much, Alexei. You're absolutely correct saying that the mortgage growth rate riveted back to adequate levels. You're also absolutely right saying that the basic thing is the affordability of housing, not just the affordability of mortgage lending, because mortgage lending in itself cannot ensure the housing affordability even the interest rates are low, because the core condition for the housing affordability is when the household income growth doesn't lag behind and rather is ahead of the housing price growth. Over the past few years, it's been the other way around in our case. The prices were growing faster than the individual incomes. Situation currently is changing around. We see that even after the key rate becoming higher, even after we recalled the non-customized, non-individual mortgage lending, the price growth for housing has slowed down in a number of regions based on the recent data over the Q4 last year. Some of the prices demonstrated deceleration, and in such regions, we were able to see the overheating being the primary reason. So an important factor to us is the inflation slowdown, because the overall inflation going down will curb prices growing for housing, and it will reduce pressure upon households' real incomes. And that is a trajectory towards improving the affordability of housing as the inflation slows down. The market-based mortgage lending rates would also go down. Currently, they're very high. I always reiterate, when we had 4% inflation, our market mortgage lending without subsidized program was quite affordable and was evolving quite rapidly. Thank you. Colleagues, Natasha, please. Natalia Trushina, Moskovsky Komsomolets, the economics desk. My question is going to be about inflation. A year ago, the Bank of Russia started out with 16%, and towards the end of the year, it was expected that the inflation to go down to 4.5%. But realistically, the prices ended up being at 9.5%. The Bank of Russia started this year at 21%, expecting to slow it down to 8%. Inflation 8.5%. Although the reason behind inflation remained the same in January, the EC would like to introduce the 16th package of sanctions. The utilities tariffs are going to be growing not by 10 but 12%. At the same time, the Bank of Russia continues to expect the inflation to go down to 8%. Now, considering that, doesn't the central bank demonstrate its very over-optimistic expectation in terms of the inflation go down? Maybe your forecasting shall be repeated, particularly that in your forecasts do not rule out the possibility for the key rate to grow further. And maybe it would make sense to introduce two ratios. Maybe in the baseline scenario, the inflation will go down to 8%, as you're saying, but in the top conservative one, it will grow up to 10.5%, kind of to split it into two possible options. Thank you for your question. Well, you know, nobody can see into the future. Nobody has a crystal ball like many market players, be it analysts and in the government. We produce our forecast based on the data available to us currently. Once the new data come, new events take place, because last year was very abundant in many events. That forces us to review our current estimates and update our forecasts. That is an absolutely normal thing. Yes, there are many pro-inflationary factors at play right now, like you stated, but many things changed as well compared to last year. First of all, the key rate is already 21%, and that is a very high level of tightness. Some believe it to be over-excessive. That is a very high level of tightness. And so we think that it should be enough to slow inflation down. If we see that there is no sustainable inflation slowdown, we will be ready to raise the key rate further. But in the meantime, we see all of the lending segments cooling down. And Mr. Zabotkin also reminded us that not only lending is important, because we expect that the budget this year, the fiscal processes, would also demonstrate disinflationary effects. So we'll be looking at how sustainable it all is. The alternative scenarios that you're referring to, yes, they are there. We update them once a year, once we put together the main guidelines of our monetary policy, because I was referring to the risk-based scenario, which in many ways is related to the external events. We also have pro-inflationary scenario. I mean, in case pro-inflation scenario manifests itself, we certainly then will be looking at the way we need to adjust our monetary policy in order to achieve low inflation. Alexei Borisovich, another important remark is that the kind of a scenario wherein we would come from a different set of prerequisites which will result in an additional and more sustainable pressure. As a result, it would not be inflation moving along a different trajectory, but the key rate will do so, because by foreseeing these circumstances, we would have been pursuing a different monetary policy, trying to ensure a stronger tightness. So that's an important thing to understand. The difference in prerequisites to larger extents impacts the forecast key rate trajectory rather than inflation. And that is why, under any set of circumstances, we're targeting inflation, trying to set our sights at what it should be towards the end of the year, once you know what kind of requisites may come around. I shall say it in a different way. It's not that we will take peace with a kind of a pro-inflationary scenario where inflation is going to be higher. It means that we will tighten our pro-inflationary policy and monetary policy if pro-inflationary factors would push it towards a higher speed. So we will do our best to change our policy making in order to make sure that it will be trying to go to targets. It's not that we would accept pro-inflationary scenario. Thanks. Anastasia in the second row. Thank you very much. Anastasia Bashkartova, an independent gazette, the Independent Gazette. My question is this. Could you please tell us, under a remaining tight monetary policy and an expected slowdown in economic growth, does the central bank has an understanding of what kind of industries will require a very much specific support, such as subsidized lending? Does the central bank, together with the government, is preparing lists of such sectors and industries, or is putting together a special subsidized lending program? Because still, there's a question: how are we to support the development of the supply economics if the lending is slowing down, the fiscal impulse is, fading? So what are we to do? Thank you very much. Well, the first thing that I would like to draw attention to, the economic slowdown is taking place not because of a tight monetary policy, not because of the high key rates, but because of a significant reduction of the free resources in the labor in the first place. And so under such circumstances, the economic slowdown is inevitable. So the whole question is whether this economic slowdown will take place alongside with the high inflation or without it. And so our policy is aimed at it to be accompanied by the reduction of inflation, which is already at a high pace mark. Now, the second thing, before I specifically will be telling you about the sector, is my general note is that one has to distinguish between the economic growth slowdown and a recession, a crisis. Because whenever there is a recession and a crisis, that's where it is appropriate to pursue large-scale anti-crisis measures, because you may recall the government doing so during the pandemic in 2022, and we were softening up our monetary policy. That was an anti-crisis stimulus policy. But when there is a cyclical slowdown with an overheating as part of it, as is now, the subsidized lending, these, I believe, should be allowed only in a very rationed way. Why? Because the bigger is the number of the subsidized programs, then we would need to have a much higher key rate to reduce the availability of lending to the rest of the economy, because we are already finding ourselves in an overheating lending spree. So this program has to be very, very measured. But the definition of such priorities, the obligation of the government on our side, we do also analyze what is going on in different industries in order to understand what generally is happening in the economy and the way our decisions translate into the economy, different industries in different regions. But in terms of the sources of development and the supply economics, we've always been saying, and would like to emphasize this, lending is important, but that always brings about an additional resource. The basic resource for the majority of businesses, particularly in the investment projects, which are being financed by the stock capital, by the shareholder capital, by their own capital, by raised capital. And so we do note that over the previous years, businesses have had some very good financial results, which means that they have their own resources to continue investing. And that is something that we saw in the investment growth. Nevertheless, lending. We don't expect, by no means, we don't expect lending to contract. That's just the development of lending in terms of its pace is going to be moderate. It will remain positive. It would also help the overall economic growth. So speaking about the supply economics, to say that the supply economics is this is an important financial resource, but the supply economics means an expansion of the production capabilities, an ability to generate more output and improve the labor productivity. Financial factor is important. It is not the only one. This is business environment, administrative barriers, competition growing. Yes, indeed, we're aware of it. So the flexibility of the labor market, these are all very important factors. And we are generating an impact not via our monetary policy, but by developing the financial market so as to provide more options for different forms of raising capital by businesses to develop further. And under such circumstances, in the circumstances of the structural transformation of economy that we're currently going through, it is important for all of the resources, be it financial as well as the limited physical resources, to be funneled in the first place into the sectors where there is a better payback, a greater labor productivity. That's the way the supply economics will develop. I mean, now the marker that will show that the supply economics is developing more rather than demand economic will be the growth of output without faster inflation. And that is an important indicator that it's not just, blowing more hot air into the excessive demand. Yes, over there, Dmitry? Dmitry Morocco, Russia 24. The central bank for several years has been providing the market players with the guidelines about how the ESG factors should be accounted for. The ESG bond market in Russia is in a budding state. So what does the central bank believe it should have as a regulation in order to provide it with a sound future? Indeed, together with the government, we continue to develop the regulatory system and the incentivization system to take into account the ESG factors. The ESG taxonomy would play a big role, particularly, like in the bond market. There are already some pilot bond issues. So we're thinking about the way they should be reflected in the banking regulation. I mean to say that this is an ongoing work, and one would definitely need to fine-tune regulation so as to reflect in it the progress so far achieved. Thank you very much. Next question online from Svetlana Muratova from the Nizhny Gorod News Agency. Thank you very much. So, considering the results of last year, the national economics demonstrated a growth which was higher than the expectations, but also inflation is keeping up. So how one can find a balance? Is it possible to find such a balance at all in order both for the economy to develop as well as for inflation not to be high? Because the subsidized lending that is being given to businesses do push inflation higher. And basically, to what extent the inflation is gaining more speed because pensions have been indexed upwards as well as the wages have been raised. Thank you very much, Svetlana, for your question. The balance that you are referring to between the economic growth as well as the reduction of inflation can be found more, or it should be found, and our monetary policy specifically is trying to achieve it. I mean, not for the economic growth to be just a short-lived one, albeit with high rates and impressive results, but for the economic growth to be sustainable, for which purpose inflation needs to be put under control, because a moderate price growth is the foundation for a long-term economic growth and development. Regrettably, we've been finding ourselves in a situation for quite a period of time when the demand growth is keeping ahead of the possibility to produce goods and services in order for the demand, as people more often say, really is running way ahead, should really allow the supply to keep abreast of it, and so somewhat of a slowdown in terms of the economic growth when exiting from the overheating zone is a natural process. So our task is to, as the economic vernacular states it, for the economy to land softly with a quick entry into the higher development pace and lower inflation. The fiscal policy plays an important role towards it because it is important for us both for the fiscal deficit as well as the scale of the subsidized programs that have been mentioned more than once today to remain as the government is planning them to be these days. As far as growing incomes and wages, no. Inflation grows not because of that. It's an objective limitations which do not allow the labor productivity to grow at the same high pace, because the labor productivity lagging behind the wage growth constitutes the kind of the pro-inflationary factor that we're currently witnessing. Thank you very much, colleagues. Katya. Hello, Ekaterina Litova from the Vedomosti. In your press release, you are saying that the economic growth in 2024 exceeded your forecast, and so that its trajectory of growth is deviating substantially from a balanced one, like the wage growth compared to the labor productivity growth. Does the central bank has any assessment in terms of what is an balanced economic growth as well as balanced wage growth? And could you also identify the industry which would make the biggest contribution into the economic overheating? Well, the economic overheating and the demand overheating, this is not an overheating in specific segments because we talk generally about the economics, although certain disbalances in certain industries may be much stronger, while in others maybe not so. Now, with regard to the balanced growth rate, these are the sustainable ones that do not produce continuous inflation growth when inflation stays at the 4% target level. Alexa, would you add something? Yes, of course. Sorry. No. With regard to the industries, the macroeconomic rationale is the aggregate demand and the aggregate supply. So consequently, it would be adequate to hypothesize about the possibility of a gap in terms of the deviation of the aggregate demand from its potential, and also speak about the kind of industries which are more overheated or less overheated in terms of the macroeconomic rationale. It doesn't make sense because inflation, again, it reflects the general picture throughout the whole economy, and so from the point of view of what kind of assessments can be there. In terms of the quantitative ones, we haven't yet published any, but as you may know, in the main guidelines of the monetary policy, there is an insert which describes in detail the rationale of the potential and the divide and the gap, and there are certain modeled charts in terms of where we're currently right now, which we put together as a picture from the data and sets a certain guideline towards the forecast vision, which is the balanced and stable growth, which is the GDP forecast growth, towards the forecast time frame, which is 2027, being at 1.5, 2.5%. Thank you. Colleagues, please. Vladislav. Vlad Lobov, Invest Future. Elvira Nabiullina, 7 years ago, you came out with a lecture dedicated to Michel Camdessus, stating that the sanctions and trade wars bring about trans-border effects that one cannot expect, which forces us to grow our reserves more. Has the central bank started getting ready for the trade wars? How it is going to do it? You also touched on the subject. Could you give us more details about the way the trade wars may affect Russians and the inflation? Well, you know, we have always been readying ourselves for risks because we believe that our financial systems must be able to withstand different kinds of shocks which happen all the time. So we have special reviews of the financial risk and the financial stability. But as far as the trade wars are concerned, overall, their impact upon the economies, the global economy, may bring about the slowdown of the economic growth when you see fragmentation, when the resources are not reallocated into where they can be most effectively used, which may bring about a slowdown in the global economic growth rate and consequently the slowdown of the demand for our export staples. And although the dependence of the Russian economy from the commodity exports is growing down, but it still remains, and that is why we are monitoring it and reflected in our risk scenarios. Now, in terms of our readiness to face such a risk, I stated it in the past, and I continue saying that there may have to be two elements of such a preparation. First of all, the economy mustn't have any material disbalances. I mean, weak links, because whenever any shock events happen, these weak links may bring about the domino effect. Let's say unstable banking industry, like what we used to have in 08 and 09, when one had to save the banks, our economic blood system. So improving the situation led to the banks and starting to help the economy, restructuring loans, over-lending banks and businesses. So you must not allow that to happen in terms of allowing the economic agents being overburdened with excessive debt, as well as the household. And you need to have buffers. The macroeconomic buffer, like for example, is the National Welfare Fund. If the situation worsens, you always have the means to support the necessary spending and so on and so forth. In the banking sector is the capital buffer. By 2022, we came to this year with a very good adequacy levels in capital buffers, irrespective of unimaginable sanctions upon our financial sector. Banks were able to grow their lending. Of course, we provided with some regulatory easing, but the lending continued to continue at a very high pace. And we always believe that the banks must always maintain capital buffers, and that is why there is a planned, scheduled normalization in our regulation in order for the banks to accumulate such a buffer capacity. So, speaking about getting ready for any events that might happen, these are the main two ways to go towards it. Thank you very much. Next question comes from Denis Yalahovsky. Good afternoon. You already mentioned today that you don't have the crystal ball, but nevertheless, higher key rates raised by the central bank in the area of the reserve currencies like EC and the Fed was very painful for the ruble zone. One of the recent inflation figures showed to be very high. So in your forecast, do you plan for the dollar exchange rates to go down or not? Well, first of all, the impact from the decisions of the central banks which issue reserve currencies over the past several years have diminished, specifically because the cross-border capital movement and the capital flows, in our case, the impact upon us has gone strongly down. So the exchange rate is much stronger dependent upon our exports and imports. Without doubt, we do take into account certain prerequisites with regard to the development of the global economy, and the rates we do take into account the global rates, but on a very minimal, in a very minimal way. Colleagues, Anna Kalina, Izvestia newspaper. With your permission, I would ask you my question and then follow up on one of the previous questions. With respect to the mortgages of March 1st, do you plan to reduce the macroprudential markups? But at the same time, you ended up getting the possibility to establish macroprudential limits on mortgage as of the middle of this year. Does it mean that you're not going to put to use what we can do about the imposing limitations? And the follow-up question with respect to the government. Last Friday, the President of Russia set two strategic tasks to the Prime Minister. One of them was reduction of inflation. You see, we've always been saying that the central bank is responsible for that. Now the government has also been made responsible for it. So in lieu of this, what kind of help do you expect from the government? Well, first of all, we will definitely make good use of this opportunity. We slightly have reduced macro-prudential markups in mortgage in the category of the average risk mortgage, where the debt burden ratio is less, I think, than 70. And the so-called LTV ratio of the original contribution is over 20%. But the macroprudential limitations we're going to introduce most probably on the mortgage with the debt ratio 80+ and the respective LTV, and we will probably adjust the macroprudential markups in this segment as well. Now, as far as the task of achieving inflation, is concerned. Inflation is always about the supply and demand balance. In our monetary policy, we do impact the aggregate demand, but the budget deficit is also impacting it. So that is why we take into account the budget parameters. Once again, I shall reiterate that we're very much hopeful that the disinflationary effect from going back to the fiscal rule that is currently there will bear fruit. And naturally, the stronger is the possibility to expand output. I mean, like the supply economics, where structural measures are important. This is the competency and the authority of the government with which we are very actively collaborating. I don't think there is any need for any additional efforts to coordinate what we're doing together. We exchange our views on the economic prospects, but we are independent in terms of the decisions that we're making. We decide on the monetary policy independently. Colleagues, please. Mikhail in the last row. Mikhail Matseyev from Media. The developers, real estate developers, are expanding the deferral in payments when building housing. The central bank was saying that that constitutes some risks and was also saying that it will introduce regulations into it. What kind of regulation this would be? Will it be a new kind of a standard? And well, it may be introduced. Well, indeed, we see that the share of deals in the market has become more numerous, and we see that this payment on installments has become more frequent, the one that is being offered by the developers. We do have a bit of a concern because the broad application of such schemes creates risks both for the buyers as well as for the developers. Now, what kind of risks there may be for a buyer? For example, you come and you get yourself an installment program for 2 years, usually, against the promise that the rates on mortgage will go down and it could be then transformed into a mortgage loan. Nobody guarantees that you will get it. So it is important to make sure that you don't find yourself in a predicament of any livelihood nature. Secondly, in terms of the debt burden, paying in installments is still a debt, even if it's interest-free. But it means that even though spread in time, you will have to pay it up. And the information about this kind of debt is not being passed over to the credit bureaus. For example, as an individual, you come to a different bank to get a loan, but any information about there being a debt on you and your ability to service is not there. So that is something that may lead to an overburdenment with lending. So this is the risk. And so we're trying to regulate it through the indicators of the debt burden. And so this debt burden here is not being practically taken into account at all. Now, on the side of the developers, what the risks may be if an individual buys housing and pays for it in installments, escrow accounts are not filled, the developers effectively may lose the subsidized funding that they are currently enjoying for their projects, because money growing in the escrow accounts results in the developers getting loans at some very affordable interest rates. So that is their risk. As far as the standards are concerned, the mortgage standard that is currently in force, it is about the banking activity. It doesn't regulate the relationship between individuals and developers. So currently we don't see how it could be made to become popular. Most importantly, this installment payment should be very transparent to the people. There shouldn't be any fees, and people must be fully aware of what kind of consequences there might evolve. So, yeah, we have some concerns, and so we are monitoring this. Thank you. Next question comes from online from Victoria Shergina, Law and Finance publication. Has anything changed in the central bank's assessment of the state of the banking system over the past several months? Do banks are able to maintain necessary adequacy in order to survive the higher interest rate, a higher key rate? Yes, the banks have sufficient liquidity, sufficient adequacy, sufficient capital. Like I said, before 2022, there was a sufficient amount of capital and the standards which helped all to pass through the most acute crisis stage. And in 2022 and 23-24, the banks have been growing their lending faster than growing their capital. So next, we believe that the lending growth should be commensurate to the bank's capital growth, because we believe that the capital cap over it should always be sufficient. That's why we always insist that they do that. And the macroprudential markups also work for the additional capital to be reserved at the beginning of 2025. Thanks to such macroprudential markup, the banking sector already has accumulated an additional capital buffer worth 1,200 billion rubles. As far as the higher rates impact upon the banking capital is concerned, the capital reserve they may have is not linked to the need for them to suit the higher key rates, but it definitely means that the banks need to take into account the borrowers' risks who borrow at such high rates, and consequently they should also have enough capital to balance it. And so the bank should also grow the highly liquid asset base. In terms of the schedule, we have given them a bit of an easing, but nevertheless they should improve their balances. So overall, we expect the banks to improve their capital positions, both as far as liquidity is concerned, and that will really create a very good base to further finance the economic development. Well, thanks very much. I guess the very last question, Nikita, please. Nikita Prokofiev, Pro Finance Company. Could you please tell us, your forecast for inflation for 2025 was brought higher. Is it possible that the central bank may reduce the key rate before this inflation target is achieved? Thank you. Well, I mean, in order for us to start reducing the key rate, the inflation does not necessarily have to arrive at 4% mark. It is important for us to make sure that the inflation is sustainably slowing down to the target level. In other words, if we expressly see a slowing down trend, which comes not from any one-off thing which will lead it to 4%, then it is quite a feasibility. We are not yet seeing such prerequisites. We don't see such stable, sustainable trends. We are monitoring a broad set of indicators, but in terms of the recent data, in terms of the lending and saving and the money aggregates, if they acquire sustainable nature, then the reduction of the key rate is possible. If, conversely, we see that the pro-inflationary trends prevail, then the key rate may go up. Alexei, please. Yes, and I would even make it much more pronounced. I mean to say that in order for us to believe that the data is enough for us to recognize such a trend as sustainable, we need to see in the inflation dynamics and the inflation expectation dynamics, because in the meantime, whatever we see in the data is the lending growth slowing down, the money aggregate growth slowing down, but it hasn't, both of them haven't yet translated into the inflation. So without such a simultaneous reduction of all types of indicators in what the economic agents do, no, it's not enough. Thank you. Colleagues, thank you very much. Wishing you all